Okay, Module 5, Transport Management CPC revision for financial management. Remember to just pause the presentation between questions when you're ready. What is capital? Capital is the amount of money invested into a business to make it function. What are assets? Give examples. Assets are the resources of a company. Examples include buildings, equipment, vehicles, and fuel stock. Assets are divided into two categories. What are they? Fixed and current. What are fixed assets? They are resources that are kept over a year, such as vehicles and buildings. What are current assets? They are resources used in day-to-day business, such as cash or fuel stocks. What are liabilities? Liabilities are the amounts of money owed by the business. What are long-term liabilities? They are liabilities which will continue beyond the end of the financial year. What are current liabilities? They are liabilities which are likely to be repaid during that financial year. What are debtors? Debtors are people who owe the business money. What are creditors? Creditors are people of whom the business owes money. What does the trading account do? It calculates the gross profits by recording all sales, then deducts the direct costs. What is a profit and loss account? It takes the gross profit from the trading account and deducts the indirect costs to produce a net profit. What is a balance sheet? The balance sheet will list all assets, liabilities, and capital of the business. What is a budget? It is a definite plan of what a business aims to achieve. What is liquidity? It is the measure of how much money a company has in current assets which can quickly be used to pay debts. Name two sources of long-term funds. Share capital, bank loans, debentures, revenue reserve. Name two sources of short-term funds. Creditors, bank overdrafts, short-term loans, or taxation due. Name two fixed assets. Land or buildings, fixtures and fittings, plant and equipment, company vehicles, purchased, not leased or hired. Name one current asset. Stocks, so fuel or parts, debtors or cash. What are the three main components in a trading account? Turnover, cost of sales, and gross profit. What are the three main components of a profit and loss account? Gross profit, indirect expenses, net profit. On a balance sheet, long-term sources are called long-term what? Liabilities. On the balance sheet, long-term uses are called what? Fixed assets. What is working capital? It is the amount of liquid available for the running of the business. How is working capital calculated? Current assets minus current liabilities. How do you calculate current ratio? Current assets divided by current liabilities to 1. What is the acid test calculation? Current assets minus current value of stock, then divided by current liabilities to 1. How do you calculate total capital employed? Total assets minus current liabilities. Receipts coming into a business paid from its customers are called what kind of cash flow? Positive. What is debt factoring? This is when a factoring company purchases your invoice, which you raise to your customers. It pays out a large percentage immediately, and then the remaining minus surcharges once the invoice is paid to the factoring company. Okay, so that's the end of the Transport Management revision module for financial management. Good luck in your exam.